from an investor's perspective, we see the Canadian market, the Canadian economy well positioned as we think 5 years out. And so from an economic perspective, well, the first thing I would say is think about the fact that we're starting from a very negative, bearish sentiment. You know, Canada for the last few years has just really been sort of underwater as it pertains to business confidence and economic expansion. So we're starting from a very low point, which leaves a lot of upside potential. The second is that with all of this trade tension talk, it really is sparking the idea of structural reform as it pertains to our economy. So something as simple and complex at the same time of removing interprovincial trade barriers, the estimates are anywhere between 4 and 6% GDP growth. So I think that's significant. And let's not forget, we're in an environment where interest rates are also coming down. So all of these factors build a strong base case from an economic perspective, and how that translates into the market. Well, first and foremost, valuations. So when you look at the TSX versus the S&P 500, there's a wide gap in terms of valuation. You have the S&P 500 trading at around 21 times price to earnings, and the TSX is at 15. So remember, making money and seeing appreciation on your investment isn't just the growth, it's also what are you paying for that asset. And if you're able to buy the asset right, there's often upside potential. And so at 15 times, valuations look much more compelling in Canada than they do in the US. And then when you add the currency factor, right now, the Canadian dollar is about 10% lower than where the historical average is. So if you buy a stock and the stock does not appreciate even by $1 or by a penny, but the currency works in your favor, you can have high single-digit appreciation just from the currency. So you have that working in your favor as well. So we do see a fairly strong landscape from an economic perspective, and then translating into a market perspective as well. And from a risk, I'll just add, in Canada, the Magnificent Seven are very magnificent when it's working, and they're detrimental when they're not, and we've seen that in the market. And so Canada doesn't have that same concentration risk. We don't have 7 stocks representing basically a third of the overall market. So the economy is starting to take shape, and it'll take a bit of time, and it won't come without hiccups, but we see change.